You know what most people get wrong about retiring in Thailand? It's not the cost of living, it's not the visa, it's not even where you live. It's what happens to your health insurance after 70. Because that's the point where things quietly change. And a lot of people don't realize it until they're already inside it. Now, most of what you see online, the £1,000 a month budgets, the I can't believe how affordable this is lifestyle videos, that version of retirement assumes one thing, that you stay healthy and that your insurance just keeps working the same way it did when you're 60. It doesn't. So let me show you what exactly changes. Let's start with something most people don't see coming. In Thailand, health insurance doesn't just depend on your health. It depends on your age and the timing of when you tried to get in. Because most international health insurance plans here have something called an entry age limit. That's the maximum age they'll accept you as a new customer. And depending on the provider, that limit is usually somewhere between 60 and 70. Some stop even earlier. Now here's where this becomes a problem. A lot of people don't think about insurance when they arrive. They feel fine, they're active, life is good in Thailand, so they delay it. They think, I'll sort it out later if I need it. And that later is where things change. Because let's say you arrive at 68. You still feel healthy, so you don't prioritize getting full coverage. Maybe you go for a cheaper plan. Maybe you decide to self-insure for a while. Or maybe you just keep putting it off. Then you hit 70. And at that point, the landscape shifts. Fewer insurers will accept you as a new customer. The ones that do will charge significantly more. And anything that shows up in your medical history in the meantime, even something relatively minor, can now be classed as pre-existing and excluded. So the window doesn't just narrow. In many cases, it effectively closes. Now this is where I think a lot of retirement conversations online become slightly misleading. Because most of the people sharing "this is how cheap Thailand is" content are doing it from a position where they already solved this problem years ago. They got into a policy at maybe 55 or 60. Their premiums were reasonable, and from that point of view, everything looks simple. But that's not the full picture. There's another piece of this that matters just as much. It's called a lifetime renewal guarantee. And this is where things get even more important. Because a good policy isn't just about getting accepted in the first place. It's about what happens after. A lifetime renewal guarantee means the insurer has to keep renewing your policy every year, even if your health changes. Without it, you can technically be dropped after a major claim, right at the moment when you need the coverage the most. So when you strip it back, there are really only two critical things here: entry age and renewal guarantee. Get those wrong and everything else becomes secondary. Right, so let's say you did everything right. You got into a solid international health plan at 60, 62 or maybe 65, and you have a lifetime renewal guarantee. On paper you're covered, but here's what people don't fully anticipate. That doesn't mean the cost stays stable. Health insurance in Thailand and globally is built around what you call age bands. And this is where things start to shift. Because your premium doesn't just slowly increase year by year, it steps up. At certain ages it jumps. And after 70, those jumps tend to become a lot more noticeable. Now I'm not going to pin this to exact figures, because it varies too much between providers, countries and health history. But I want you to understand the shape of it. A plan that might feel very manageable at 60 can look very different by your early 70s, often close to double. And later on, in your mid to late 70s, it can reach a level where even people who planned carefully start to feel the pressure. Not because they did anything wrong, but because the structure itself changes over time. Now, the obvious counter argument is this: well, healthcare in Thailand is still cheaper than back home. And that is definitely true. Private hospitals here are excellent. And compared to the UK, the US, or Australia, the costs are significantly lower. So even a higher premium can still look reasonable in comparison. But that comparison only works in isolation, because in reality, you're not dealing with one cost. You're dealing with several layers stacking on top of each other: premium increases, medical inflation, and in some cases, changes in what your policy will actually cover as you age. And slowly, without a single dramatic moment, the equation starts to change until eventually some people reach a point where they start asking a very uncomfortable question. Not how much does this cost, but is it still worth it all? And that's where another idea starts to appear in conversations here: the idea of simply not having insurance at all. You'll hear this idea a lot in expat conversations: self-insuring, in Facebook groups, over coffee, in casual discussions about retirement here. And the logic sounds simple. You have savings, Thailand is affordable, so why pay monthly insurance premiums if you might never need it? You just handle things yourself if something comes up. And on the surface, that argument makes sense. It's not irrational, but it only works if you stay in the world of averages. Let me break that down. Because most of the time, healthcare in Thailand is manageable. A GP visit, medication, a short stay in hospital, minor procedures. These costs are real, but they're not life-changing. And for most people, most of the time, that's what healthcare actually looks like. So yes, in that world, self-insuring feels reasonable. But that's not the full picture, because healthcare isn't just about the everyday. It's about what happens when things go wrong: a stroke, a heart attack, cancer, a serious accident. These are not common, but these are events that define the financial outcome. And when they happen later in life, in your 70s, the numbers change completely. Even in Thailand, where private healthcare is far cheaper than the UK and the US, you can still be looking at treatment that runs into millions of baht. Complex surgeries, extended hospital visits, ongoing treatment cycles, not once but potentially repeatedly. Now, if someone has very substantial wealth, they might be able to absorb that. But most people aren't making decisions based on worst case scenarios. They're making them based on what usually happens. And that's where the gap opens up, because there's another layer people don't always factor in. It's not just financial, it's psychological. If you're in a hospital bed in Bangkok and every test, every procedure, every decision is effectively coming out of your own savings, that changes how you think. It changes what options you lean towards. It even changes whether you fully pursue treatment or start questioning the cost. Not because anyone tells you to, but because it's always there in the background. And this is the part that often gets missed in the "I'll just self-insure" argument. It's not just a financial strategy, it's a risk exposure strategy, including emotional pressure. And eventually, there's another hard reality. Once you reach your mid-70s, if you haven't already secured coverage, the option to get insured may simply disappear. Not because you changed your mind, but because the system won't accept you anymore. Which means it stops being a choice and becomes the reality you're operating in. So what do people actually do? The ones who've really thought this through. Now, I want to be clear, I'm not a financial advisor. I'm not telling you what to do. But after speaking with long-term expats here, people who've been in Thailand 10, 15, even 20 years, there are a few clear patterns that show up again and again. Not perfect solutions, but practical ones. The first is what you would call an early commitment strategy. These are for people who arrive in their mid to late 50s, sometimes early 60s, and immediately lock into a proper international healthcare plan. Not because they felt sick, but because they understood timing matters more than health in the system. They accept higher costs early on to avoid being locked out later. And the mindset shift is simple but powerful. You're not buying insurance for today, you're buying it for 75. The second approach is the hybrid model. This is where people keep a lower tier or higher deductible international policy in place, just enough to cover the big, catastrophic events. And then they self-fund the smaller routine costs, doctor's visits, minor treatment, everyday healthcare. It reduces monthly pressure, but it still protects against the worst case scenarios. It's not perfect, but it's a controlled risk instead of open exposure. The third approach is something you don't hear talked about as much. Not general savings, but a separate pot of money that's treated as untouchable unless it's a medical situation. And the discipline matters, because the people who do this area aren't just hoping healthcare stays cheap, they're preparing for the years where it won't be. None of these approaches removes uncertainty, that's important. They just change where the risk sits. And when you look at people who've done well here long term, that's the difference. Not luck, but positioning. They didn't rely on the idea that Thailand would always be cheap and simple in every phase of life. They planned for the phase where it isn't. There's also one more layer that often gets overlooked: location and access. Because Thailand has some of the best private hospitals in Asia, Bangkok Hospital, Bumrungrad and others. The quality of care is not the issue. The issue is what it costs when you're not properly covered, or when coverage starts to narrow. And that's where things become very real very quickly. Because at that point, it's not just about money, it's about how quickly you can access treatment and how confident you are in what your policy actually does and doesn't include. And the people who've already dealt with the complexity early tend to be the ones who feel calm later. Not because nothing could go wrong, but because they already know what they'd do if it did. I want to end where I started, with mornings like this, because Thailand is still genuinely one of the best decisions I've seen people make later in life. The quality of daily life here, the warmth, the food, the pace, the cost of just being alive and comfortable. It's real, it's not a fantasy, I see it every day. But there's another version of this story that doesn't get told as often, and it's just as real. The version where everything is fine until it isn't, where retirement feels simple in your 60s, but becomes something very different in your 70s. Because healthcare doesn't usually arrive as a problem in advance. It arrives as a moment, a diagnosis, a hospital visit, a decision you didn't expect to have to make. And by the time that moment comes, a lot of the earlier choices are already locked in. I've seen it play out in different ways. The 65-year-old who thought they'd have time to sort everything out. The 68-year-old who always meant to upgrade their insurance but didn't quite get around to it. The 72-year-old who now has coverage costs that feel completely different to what they were before, and is trying to make decisions from inside the situation, not before it. And none of that is about blame, it's just how time works. Because the truth is, Thailand doesn't suddenly become difficult in your 70s. It becomes more dependent on whether certain decisions were made earlier. And the people I've met who've done this well, they're not living in fear of what might happen. They've already moved a lot of the uncertainty. Not because nothing can go wrong, but because they already know what happens if it does. And that's really the difference. Not luck, not optimism, but timing. So yes, Thailand is still one of the best places I know for this stage of life, but it rewards people who treat the later years as part of the plan, not something that just takes care of itself. And if there's one simple takeaway from all of this, it's that don't rely on the early version of retirement to stay exactly the same in your later version, because it definitely doesn't. Take care of yourselves, and I'll see you on the next one, guys.